Most people lose money in real estate, not because property doesn't work, but because they don't have a strategy. Some investors focus on cash flow. Others build long-term wealth through appreciation. So what's the difference between guessing and investing with a plan? Today, we'll explore 5 powerful real estate strategies used by successful investors. Welcome to Decode Advanced English on Wealth by Hana House, where English meets finance, investing, and real-world thinking. In our previous lesson, we discussed common mistakes new real estate investors make. Today, we'll look at the other side of the story. Instead of mistakes, we'll explore strategies used by experienced property investors. To understand these strategies more clearly, let's listen to our experts, Alistair and Victoria.
Property investors often follow specific strategies depending on their financial goals.
Indeed, there's no single approach that works for everyone,
Some investors prioritize cash flow.
meaning they acquire properties that generate regular rental income.
Others focus on capital appreciation, expecting the property value to increase over time.
Quite right. And some investors improve properties to increase their value.
Which is commonly known as a value-add strategy.
Successful investors often combine several strategies within their portfolio.
So, what do these strategies look like in real life? Let's listen to Liam and Sophie.
Bank financing plays a major role in real estate investing. I always thought real estate investing was just about buying property.
There's actually a lot more strategy involved.
Like what?
For example, some investors focus on cash flow properties.
So, properties that generate rental income.
Exactly. Others buy property in areas that are developing.
That sounds like a capital gain strategy.
Right. Then there are investors who renovate properties.
To increase the value?
Yes, that's called a value-add strategy.
Interesting. What about using bank loans?
That's another strategy called leverage.
So, investors use borrowed money to buy larger assets.
Exactly. And over time, many investors build a property portfolio instead of owning just one property.
That was a great conversation. Let's quickly recap the 5 key strategies we just heard. First, the cash flow strategy, focusing on properties that generate regular income. Second, the capital appreciation strategy, investing in assets that are expected to increase in value over time. Third, the value-add strategy, improving a property to increase its market value. Fourth, the leverage strategy, using borrowed money to expand your investment capacity. And finally, the portfolio strategy, building multiple properties to diversify risk and increase long-term returns. If you look closely, these strategies are not about luck. They are about making intentional decisions based on clear goals. Some investors focus on income, others focus on growth, and many experienced investors combine several strategies over time. That's what makes their approach more flexible and more resilient. Now let's decode some useful vocabulary from today's lesson. Term number 1, capital appreciation, meaning the increase in value of an asset over time. Example, many investors buy property in developing areas expecting capital appreciation. Another example, long-term investors often benefit from capital appreciation in growing cities. Term number 2, leverage, meaning using borrowed money to increase the size of an investment. Example, real estate investors often use leverage to acquire property. Another example, leverage can increase potential returns, but also increases risk. Term number 3, portfolio, meaning a collection of investments owned by an individual or organization. Example, experienced investors usually build a diversified property portfolio. Another example, a balanced portfolio can reduce overall investment risk. Reminder term, cash flow. You may remember this term from our previous lessons. Cash flow refers to regular income generated by an investment. Example, rental properties can produce stable monthly cash flow. Understanding strategies is important, but before investing in a property, investors must answer one critical question. Is this property actually a good investment? In the next lesson, we'll explore how investors answer that question. We'll learn how to analyze a property investment. You've been watching Decode Advanced English on Wealth by Hana House, where English meets finance, investing, and real-world thinking. See you in the next lesson.